I think they're doing the right thing. Structurally, what we've seen the regulators have done in recent years by allowing more state companies, basically small local state companies, to go default or bankrupt, it's the right thing to do because, as Jesse mentioned earlier, that all these new regulations, new guidelines, they are trying to handle or address the moral hazard problem to make credit pricing more proper in China, and also to inject a sense of risk to Chinese fixed income investors, especially the local investors, because they are so used to implicit guarantee. So structurally, I'm quite positive about what Beijing is doing. My short-term concern is that there might be a miscalculation by Beijing that they are too confident about the system's resilience to withstand their deleveraging and financial de-risking policy, which they may have done too fast, and that could create some credit events that's unexpected by the government. If you put that backdrop into the Huarong case, I think the Huarong case could be very important in telling the world and the market that whether the Chinese authorities are serious about retreating from implicit guarantee. Because, first of all, this company is majority owned by the MOF. And secondly, it's a 1.7 trillion RMB company. It's a big company, which many people say is too big to fail. So the ultimate bet, if you would, is whether Beijing will come in and bail out or will allow it to some extent default restructure. I think Beijing can afford it to fail if it's really serious about retreating from implicit guarantee. Because look at the past failures. We have HNA, we had Anbang Insurance, we had two of the three banks that failed in 2019. They were all big companies, more than $1 trillion in assets. They were allowed to default. So from a structural perspective, I am quite happy that I think Beijing is doing the right thing. The balance to strike is how to maintain public confidence and systemic stability.